In the dynamic world of Forex trading, staying informed about major fundamental news is paramount for success. Today, we delve into the crucial events that can send ripples through the foreign exchange markets, influencing currency values and shaping trading strategies. One of the most significant indicators in Forex trading is the release of economic data. Events like the non-farm payroll Unbap report, which discloses the number of jobs added or lost in the U.S., can cause substantial market movements. Traders keenly watch for deviations from expectations, as these can trigger volatility and present lucrative trading opportunities. Central bank decisions and announcements also play a pivotal role in the Forex market. The interest rate decisions made by central banks, such as the Federal Reserve or the European Central Bank, have far-reaching consequences. An increase or decrease in interest rates can impact currency values and influence the direction of Forex trades. Political events and geopolitical tensions can introduce an element of uncertainty into the Forex market. Elections, trade negotiations, and diplomatic developments can lead to sudden and drastic currency movements. Traders must stay vigilant and adapt their strategies to navigate the potential impacts of political shifts on the global economic landscape. Political events and geopolitical tensions can introduce an element of uncertainty into the Forex market. Elections, trade negotiations, and diplomatic developments can lead to sudden and drastic currency movements. Traders must stay vigilant and adapt their strategies to navigate the potential impacts of political shifts on the global economic landscape. Inflation data is another key factor influencing Forex trading. Central banks closely monitor inflation rates, and unexpected changes can prompt policy adjustments. Traders must keep an eye on inflation reports, such as the Consumer Price Index (CP), to anticipate potential shifts in monetary policy that could affect currency values. The energy market also has a significant impact on Forex trading. Oil prices, in particular, can influence the economies of major currency pairs. Oil-producing countries often experience fluctuations in their currencies based on changes in oil prices, making it crucial for Forex traders to monitor developments in the energy sector. Remember, understanding and reacting to major fundamental news is essential for success in Forex trading. Traders who are well informed about economic data, central bank decisions, political events, inflation rates, and energy market dynamics are better equipped to navigate the complexities of the Forex market. By staying abreast of these major influencers, traders can enhance their decision-making processes and increase their chances of making profitable trades in this ever-evolving financial landscape.